Good morning, traders. The 25th of June. We have about 105 tickers. Thank you for being here if you are. Thank you for watching at home if you're not. If you like this video, hit like or comment. I do look at the comments, so we can go back and forth with the comments if you have follow-up questions. It is always recorded, Nasky. I understand there's some time differences. Some people like to go to games and churches and temples and all kinds of stuff. So we will record it. Doing the work, I don't want it to go to waste. You guys are already members. Okay, let's get started. First one is Alcoa. So with the Alcoa, I put this red path, and it's following the red path perfectly, and that's nothing more than this guy. Whoops. The red path is happened before, and I just copied it and moved it over to see if it's happening again, and it is. So the question is this yellow circle here? So are we in the spot trying to bottom, or is this different? Is this bottom actually a bottom, unlike this one was a trap door? So that's the question. So Alcoa, I would start worrying a little bit if it goes lower than last week, especially if it loses 31. I think if it loses 31, it could lose another $3, $2 to $3. If they go above 36, I would start seeing that, okay, maybe this time it's different. And if it goes above 37.50, this guy, then this is a likely bottom, and it may meander up. They'll start buying dips. So if you want to get long here, I get it. You're anticipating it being different than this time, but put a stop and avoid earnings. Good morning, Luis. Okay, so that's Alcoa. So this guy got shellacked on its earnings, but I think it was for good reason. If I'm remembering correctly, it had a drop in sales. So I wouldn't be too quick to catch the falling knife. Having said that, it did have a big haircut. So if you want to go long into this base saying, okay, so we reacted for 2 days and that's good enough for now, that's fine. I don't like two things about it. First of all, it lost whatever happened here in March 20, the lows in March 2020, which was the pandemic. And it's exactly below it where they refused it. Look, the pandemic low. That's a pretty big event. And they lost it. So there is support, but look how old I have to go here. 2014 and 13 and 12. So this stock is not for me. Something changed. I don't want to be a hero. I don't think it's one of those things, oh, it's going to fill the gap type of a deal. It may take a long time. Apple, on the other hand, is the exact opposite. Apple is at all-time highs. Now, before I go on any further, we'll see how the VIX reacts on Monday. We had the opportunity for civil war in Russia, basically, and I think that coup was thwarted. Insurrection. We'll see what happens with the headlines, but something's got to change. Fear is going in the toilet. Basically, there is no fear, but they tell us the world is in shambles. So which is it? Should we be worried a little bit, or is the world in not in shambles? So we can't continue like this without one of two things: a mega breakout with everything goes like 2021 almost, or we drop a normal drop, which I've said would be 3 to 5%. So I'm speaking this about Apple because whatever happens to Apple happens to the S&P. Apple does not have any Apple-specific issues. So it is in all-time highs. It could dip down to 180, 177. And on this time frame, this would be an opportunity to get long. The breakout was here. The target is here or higher. So to me, dips are buying opportunities. So if next week, if this coming week, Apple drops 3 to 5%, technically, it's an opportunity to get long on this time frame. If I'm an investor, I would not touch Apple for an investment up here unless my time horizon is a decade, which it never is. So it's more of a trade. And if I'm long Apple, I would be selling calls or Lightning. If it was a trade, I would take off some to re-engage lower. So I'm not bearish Apple. It's in a breakout that should go higher. So until the market corrects, we are buying dips. First level of support, if I can call it support, 183, 181. The better one is 177. This is the June range so far. This is a support zone down here. The better support, if I was to like invest for 3 months, would be below 173 for my taste. Down here. Down here. That doesn't mean much for a lot of people, because I'm okay seeing things go without me. Some people panic. They just can't stand it. I think there's plenty of time to get into Apple as an investment. All right, so AbbVie. I'm trying to find okay, so here's the thing you can do with AbbVie. I don't know the company's fundamentals. I don't like the industry. It has fallen. It's so violent. Look how big it moves up and down. And every time so far in the past, recent past, it hit this area or lower, it bounced. This is one event. This is another, and here it is again. So is this that where it's going to rally again? I think it has resistance at 145. I think there'll be sellers in here. It's a zone, and there's definite support below. So on which side of the fence are you? So you have buyers below, and then sellers above. Just like Alcoa, you can go long as long as you're open to having stops. Like if it goes below this, I don't know where it goes. And this looks hard to lose because it has supports at 135, 134, and then better one at 131. But if you lose 131, how low are they going to go? So that's the thing. So maybe a credit put spread would work, but that's an industry I don't like to use for credit put spreads. We'll see. Airbnb, good rally. I think it can dip to 118 before it gets to 132. If you look left, this is a daily chart. Last time it was here or here, it dipped. It had one incident where it spiked, but it had an opportunity for that, and that was a catalyst. But so to me, there is a, did I have one? Okay, so this purple box is the playground for now. If I wanted to put something here to give you a visual as to where the sellers are, I think this is a resistance zone. And it's pretty consistent back to here even without me going back. Oh my gosh, okay, check it out. Since its inception, so one can argue it came out of the box, lost a leg, and it hasn't recovered it then. It may not for a long time. The business is okay. I would be buying dips. Up here, it's not for me. It's vulnerable to dips, and I wouldn't get engaged on the dips. 118, 113 are doable. It's not my forecast. It's doable. Now, if you take this out, you might extend to 134. Accenture, I looked at it last week. It is falling into some support, but the zone is from here to here. I think it's a pretty good company. If I remember, it's a zone, so it's not a hard line in the sand. From a P&L perspective, I don't remember it. Yeah, it's pretty decent. So on the face of it, it looks like it's okay that way. So if something rallies from here to here, giving back half is normal. So let's say the market has a hiccup this week and this one ends up at 284. I think it would be a good opportunity. I do have alerts. You can see them. They haven't triggered yet. Adobe, it did trigger and I reset it. There's no way on planet Earth I would ever consider going long a stock that looks like this. Not in a million years. I've never done it. I will never do it. At the risk of missing out on a 10,000 reward, I would not do it. It's just against my DNA. If it sneezes, it gets down to 430. If they lose last week's low, Friday's low, they'll be in the 540, if not 520 area. And then the question would be what happens on the bounce from that. So I'm going to guess that it has the opportunity to ping pong lower, maybe down to 410, where it has better support. Somewhere in here. All right, so let's zoom back out and see where these lines are. Yeah, so is it crazy to see it drop? Remember, we went long Adobe right here. We got in trouble the next day, and then it rallied 56%. So if it gives back half, that's 425. of the rally. Oh, check this out. Interesting. Again, at the risk of missing on some more upside. Haha, Brad, that's pretty funny. Okay, so this is Affirm. It trades with SoFi, kind of the same company, almost trades with PayPal to a degree and Square, so be careful if you're long any of the other three I mentioned, not to be long this one as well. Pick and choose. Or if you want to be long both, break up the dollars between both. It has given back some into a decent little level of support. I think rallies will find sellers, and it may end up being at 13. So if I wanted to trade this on Friday, I would have sold a put to own shares, and that's about it. Or a put spread, and I don't have to do it like this year, like this month. I can go out to December and sell a put at 11 and say, you know what, give me shares at 11, I'll break even somewhere around 10. I'm making up numbers. I did not quote it. I don't know where it was. I did the same thing with a couple of other tickers if you were with me in the live room. Okay, so you saw me do this stuff. Why out to November or December, whatever is available, October, November, December? Because then I would have spread my risk across time. Okay, I don't want everything to end in July. What if we have a bad July? And then all my trades go to hell. Shorter term. Yeah, there's nothing much else to say. It has support through 1350 and then more lower. So it's already in the support zone. My concern is how they're selling the rallies. So 16 is going to be hard to break out from. And if they don't, then will they come back and lose 1450? Then we end up at 1350. So AI has rallied in spurts and given back a lot. Like last week, I think it lost 10%, give or take. But if you zoom out, from where? From the moon. Arguably, this was a target from here. So if I do a quick and dirty 16.17, yep, somewhere around here is the target of this inverse head and shoulder-ish pattern. It's not quite one, but it's the spirit of one. Based on this chart, this ticker is falling into the breakout zone, so it's not a place to short. I particularly do not trade this ticker. I think it has a lot of headlines going on, buyout, not buyout, whatever. I lose the edge when there's a headline looming because it's a binary outcome and I have no control over it. So I don't like to add extra surprises to my trades, so I avoid the whole thing. I can tell you it could be at $22 this week or next, and I cannot tell you it's not going to be at 48 or 50. So from here to here, if I split it half, that's halfway. I don't know why it wouldn't go to here or it wouldn't go to here. I can see it bumping up, finding resistance and falling, and then coming back to here. I can explain it. So how do I, if we had a green week and then they do this and they lose this line or zone, they might do this one last event at saving it and end up here. That is a possible scenario. The other one, of course, is to continue this higher low trend and breaking out from here to high heaven. Iron condor on it? No. I just told you it's the king of headlines. I definitely don't want to trade it with any credit spreads because the one thing you need in iron condors is what? To win. What do you need to win in iron condors? You need nothing to happen. And this is the opposite of nothing happening. Yeah, well, this is way too much action that is unpredictable and based on headlines that I cannot foresee. I don't know the dude. I don't know his intentions. I don't know the people that are looking at buying it or not. So definitely not for me. And it's definitely not a candidate for an iron condor. If you want to sell a strangle, fine. Not fine. Like, I would understand the logic. But an iron condor, you're selling two things expensive and you're buying two things expensive and they're not paying you extra for the expensive part. The advantage of it being violent disappears and it becomes a liability. That's my logic. ALB 212 or 204 are entry points. I don't think it's done falling. It may be under 200. It does have support. You can totally see here how it broke out from that. If you drew a line here in hindsight, you can see how that line area was a neckline of sorts, and it's been significant for a while. Check it out. The closer to it or just below it would be the better entry point, in my opinion. Yeah, 50% of it is 200. So there's no rush to get into it. If they break out from here, they can extend the rally. So I think they're in a ascending channel of buying dips. Just make sure the dip is worthy. At least 216, 215, 212. AMD, almost the same comment as ALB. So lucky for us that we had this last week. I believe I drew this before it happened, and I said, look out for this. I remember doing it. It was in the intraday session. So if you were with me in the live room, you saw me draw this, and you saw me type this out. I even made them the same color on purpose to color code it. So we saw how it got to here. So the question, what will it do next? Rallies will be sold into 119, 120. I would not go long up here. I could go long here and ride it to here and get out as a trade. As an investment, I wouldn't touch any of these. They're great companies, but they've rallied way too far, especially Nvidia. But technically, the trade is you get long here, you get out towards 118 as a trade. It could hit 122 again. And I want to caution you that if it goes below 108, something may change. Okay? 104 to 108, extremely important zone for AMD. Keep that in mind. So they will fight for it. And it just so happens right there. This is 104 and this is 108. It has support and it may bounce. It will follow the markets. So it is shortable. If you want to go along with it, this would probably be an iron condor doable thing if there's no earnings soon. Amazon, something's going on with Amazon and it's scaring me. So I'm a big fan of Amazon stock, if you know me for years and years. I'm super worried about it recently. I'm still spending on Amazon. I bought something live in the live room the other day. By the time I logged off, I had received the package. That's freaking incredible. I couldn't believe it. So it's a great company accomplishing great things. But if indeed the consumer is going to go dormant because we're in deep debt, so the spending levels have not dropped a lot from the pandemic, but now what we're spending, they tell me, the reports tell me, what money we're spending makes a big difference in the outcome from here, because we were spending cash and now we're spending credit card. That's what they say. So if that's the case, the credit cards will get maxed out and people will default on credit cards, and then we fall into a pretty bad tizzy. I don't know if that's happening. I don't know the reports. I just have to trust what they're saying, and I don't trust a lot of data from the government. So bear call spread on AMD. I don't have a reason to do a bear call spread on an AMD. I would do an iron condor. If you want to be bearish, you can do 2 to 1. So if you do 10 credit call spread, do 5 credit put spreads. Or do what I did with NVIDIA. I sold a naked call or a wide credit call spread and a tiny credit put spread, just to have some bullish money into it. Okay, we are looking at Amazon. So Amazon is... The outcome of the Amazon company is not in doubt. The timing of entries and exits is. So this is not an ideal start for Amazon. So why isn't it at all-time high or closer to its all-time highs like Apple and Microsoft? Because Apple and Microsoft have something different. So when maybe Amazon comes out and says, oh, AI, blah, 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 AI, blah, 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 AI, blah, 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 maybe it'll go back up to its highs. But Apple and Microsoft have a legitimate potential new source of income with artificial intelligence. Okay, so you can see a path to new incomes from that. It's not so obvious here, but it's possible. So if it goes above 136, it may accelerate. Up here, I would be cautious starting new investments, and if I do, I would not go all in. So this is the earnings spike high. Keep an eye on it because it should play a role on the way down as well. So you do have support scattered. and they are buying dips inside of an ascending channel, so be careful shorting it. ARC-F. Okay, on this particular time frame, I would think it's liable to go to 19, maybe even 17.5. 19 definitely doable. So here's the statement. Unless they come out of 21, they're probably going to go lower about $1. So unless they get up to here, they might bleed down to here, which was the breakout zone. Think about it. So they broke out from here, they got to the target, okay to come back and touch the breakout zone. So I'm not being bearish on it. That's normal price action. Unfortunately, that's like 4%. Not so obvious on this time frame, but if you do look at it, here's one way to look at it. It's going to be in a descending channel until they hit, oh, there's a gap down here, until they hit the neckline. So why is this not visible on the $1? Okay. So better at 18.8. The closer to 18.8, the better. How about that? Assan, vulnerable. If they lose last week's lows, they might end up at the bottom of this candle. So I'm going to put it right here. This is a must-hold scenario, and down. That purple box is support, but I think you can make it higher. The target of the drop could be as big as this. I don't want to scare people, so I will change that to being just a normal looking red line. Maybe that's a little exaggerated. I really think there's going to be buyers inside these two candles right there. So 20.2. Somewhere in here there's support. Rallies are going to face sellers at 24.50 or higher. If somebody told me they just went long, I'd say fine, just put stops. That it's an okay place to be long inside a big cluster of support. You will get really good vibes if you get up above 52.7. And if you lose last week's low, I would exit, because it may still hold up at this exit, but what if it doesn't? You'll end up getting caught. $2 drop in this one is a big percentage drop, so I would make fast stops. So the way I would do it is based on money, not levels. Levels or money. So I'll say I either lose X dollars and I'll get out, or I stop out also if I'm below here. This way you limit your loss and you have a pretty good potential upside. So how they say, cut your losers quick and let your winners run. So that would be a quit loser to cut. All right. AYX. Ooh, okay. I would not want to be involved in this one. If somebody went long on Friday, they need to have a really tight stop. Otherwise, you're going to commit yourself to a potential ride of 2% drop. $41 is where I see support. Head and shoulder-ish pattern looking here. So that will get you down in this area. If you get to 40, then it's a better entry point. It is higher lows, higher highs. So above 46, you can get $4, maybe $6 out of it. So you do have. So this is, I think, a scenario of buy the dip if it happens, to ride it back up for the potential of breaking out. You understand? Or chase the breakout, whichever you're more comfortable with. I'm more comfortable in getting long inside support. So if you're long here or lower, makes sense. So the idea is it should find support, and if it's serious offense, this will provide you with a breakout opportunity. So get long before the breakout even starts to catch it. 1 second. I'm allergic to something. I don't know what just hit me. All right. Boeing, I'm done trading Boeing, but it's back in the middle of the range. So I had an iron condor that caused me grief. And I knew that the range was viable, but all these spikes on BS headlines caused grief for those who were in the credit call spread. They ended up working out, but it was way too hard for what it was. So when a stock treats me like this, I ditch it because I would hate life if it did it to me again. So this is one of those I wouldn't trade. But if you ask me to trade it, I'll put an iron condor on it again. Or just sell a put spread and hope for the best. If the market do not fall apart, then it's the credit put spread is a better thing to do. They had the opportunity. They started to break out to get to here, and they ditched it. So maybe this one more time, and then they go to 250. So if they take out 224, they can get $10 to $20 out of it, maybe even more. I don't know. Earnings are coming soon. We'll see. The headlines were something about orders coming in for blah, 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 blah. Airbus orders, and I think, do they provide something for Airbus? Maybe they do. All right, so Baba. I'm never going to trade Baba again. Last few times I traded for us, we won. But there's just too much I don't know about China. And right here, the price is inside the middle of the range of many times. Rally from here to here, rally from here to here. We're right in the middle of it. So I feel like once they lost 89, they lost 89. They need to recover 89. That's my take. Below 89, I think it goes down to 79. And if it loses 78, it might go down to the 60s. I don't know if this is the same company as before, to be honest. The sales are coming down. This is a company, its best strength were sales. So I ordered a couple things from Alibaba. It's just shit. It's absolute crap. And you order the specs you order, you don't get the specs. It looks like what you ordered, but if you order a laptop, it'll say, or a screen, it'll say so many frames per second for the screen, etc., and it's not even close. And so it's just crap, and people will catch on to it. So headlines from China, I don't know about. Business sketchy. Sales are shrinking. Not for me. From a trading perspective, it's in the middle of the range. If you guess up from here, you're guessing. If you guess down from here, you're guessing. I don't know who has better luck, you or me, if we're guessing opposite sides. So, I don't know. Iron Condor, but definitely not for me. Brad's on fire. Baba and Thieves. Okay, that's funny. All right, so what are we looking at? BAC. Banks had a bad time last week. So now I'm starting to think maybe the next headline is more banks getting in trouble because they're acting horrifically, but the market, the VIX is also following them down. From a chart perspective, this is a starting point for Bank of America, not an exit point. So if somebody got long last week, I see what they're seeing, a potential 28.40. So not a huge rally in dollars, but a 2 to 5% rally is doable. Now, I want to caution you that there's some funky stuff going on in the options. Don't know what that's all about. And if it does play out, I have no evidence of it playing out. It means there's another big drop in Bank of America, which means XLF also. Yeah. So I don't remember at what dollar amount they were. For some reason, the number 23 comes to mind, but that seems awfully steep, like a 10-12% drop. No. So you do have support and backup support, and you do have an upside target from the green M you're looking at. So it's a better long than a short based on the chart itself. The options, I'm going to check again this week. In fact, I'm going to put it on my, oh, it's on there already, to look at it Monday morning to see how the options played out. BITO, cha-ching, cha-ching. Okay, so we went long right here. I kid you not. Within 20 minutes, some bogus headline, rehashed headline came out about Gensler leaving the SEC, and all this happened. Headline moved the stocks. See, Nick, headlines move stocks. No, I didn't know the headlines, and my entry point was about 20 minutes before the headline. So I definitely don't know anything from the headlines, and yet I timed it. So here's my take. I'm not the only one seeing the opportunity because BITO hit my target and I went long. Other big entities with connections have that same chart, and they thought it was a good idea to go long. And then they used their influence to rehash a headline. The headline wasn't new; it was weeks old. They just rehashed it and hit the AI traders go, ooh, we went to the moon. That's the conspiracy theory in me. But it's too much of a coincidence. It happens too often. And so what about now? Do I exit? No. My target for Bitcoin is 42 to 44. I entered in the low 10s on this guy, and it's now almost double. It has doubled before, I believe. Almost. And my exit is pretty clear. If they break out of 18.5, they can go to 21. And then maybe I would start you know what? I wouldn't ditch BITO. I would ditch actual crypto, because BITO so far is paying dividends, almost $1.50 in dividends in 4 months, maybe 5. $1.50 on a base cost of just about, let's say, $10.50. So my base cost for this one, after collecting the dividends on the shares, is in the 9s, low 9s. So the longer I keep it and the more dividends they pay me, at some point it will be 0. And in which case I would just keep it forever. I would ditch the actual crypto coins that I have in my crypto account. Where is resistance? Here. But that's the opportunity. You see how if they take that out, if I'm conservative with the upside target, it's $6 from here. So 12, 23 could be doable. In which case that would be Bitcoin probably 40. A 40% rally in Bitcoin from this level, which is in the 31s. I didn't check. Pretty hefty reward. And I would exit and leave runners and just sit back for the next crash so I can get even longer. So good job if you followed me and believed me on BITO. If you had an open mind, some people are just against that. I can't force people. I can just try to educate them on why you shouldn't listen to the experts on Bitcoin, because they don't know what they're talking about. I'm not an expert on Bitcoin. I'm an expert at seeing value where other people see BS. Okay, what is it? Back of the house. Bank of Hawaii. It has support. If somebody went long, like Bank of America, that's a good idea. From the chart perspective, it's almost 50% of this rally. It's almost at the breakout point. It does have a breakout up here. So if I got long here for this opportunity, and then the breakout from here will get me to 56. But I don't know why banks are thriving. Powell told us he's going to destroy their businesses. He's going to try to. He's going to try to destroy lending because he doesn't want us to buy anything significant, because he's trying to control inflation. He paused, but he basically said, I paused to get you off my back, off his boss's back. But he said, I'm going to continue raising to high heaven. I'm just going to do it in a slower manner, because he realized he broke banks. He actually caused them to fail. His actions were the direct cause of their failure. Okay? The cause. Okay? They contributed to themselves, but he was the trigger. Okay. Good trader. Entry point into 39. BX. What the heck was that? Was that a real tick? Wow. Okay, so I don't remember if we took a trade on BX or not. I know we traded it several times and won. I have a feeling we entered a credit put spread. I just am not sure. Chart-wise, now I'm questioning myself. What the hell is this? It should have support into 87. And if you lose that, the target would be this tick or a little bit lower. Bunch of support below that. Resistance into 91. Ascending channel continues. So I'm okay with that. Oh, what is this? There we go. 7.7 net credit. Okay, so I offered an iron condor between, looks like 83 and 94. Oh, there it is. Okay, so that's what I'm doing. I'm long down here, I'm short up here. Hopefully that lasts for a couple weeks. I will close it at 50% gains if I were you. But I don't know what the hell is that. Certara. I have no idea what this is. So this one is, it's once they lost 2250, they created a wall, a roof. And once they lost 21-ish, they created another roof. It starts at 19.5. Head and shoulder-ish pattern. This is the target. Actually, this is the target if I'm looking at it. So it's in the middle of this range. So if you want to draw a box around 18.2 and 16.4, I think you're going to ping pong inside that box. Just trade accordingly. If you're an investor, you don't need the chart. Just pick an entry point and don't go all in. Leave room for error. They are selling rallies, so respect that. Even if they get to 19, I think it comes back down, and it could also break 1650 because that's what's happening. Look, they have a connection, like a low, a lower low, a great rally. They come back and don't hold the low and make a lower low. So a low, a lower low, great rally. They come back. So here's what I'm going to tell you. If they don't go above 18 this week and they come back and lose 17, I think they will come back to 16 or 1550. You heard that part? You need to be above here. Otherwise, you're going to bleed down to here. CMA. Okay, 39.50 support, 44.50 exit. Build a box around that. What the heck is this? Comerica Incorporated? Is that a bank? Yeah. So I'm not inclined to trade that kind of bank. This box is your playground for now. This should be a roof that they don't cross, and if they do, they go to high heaven. Plenty of support below this box. So if you want to get long inside the box, do 1/2. In case it trips down here, you enter the second batch down below here maybe. Credit put spread, selling puts to own shares if you're confident of the bank. I'm done doing banks, by the way, for myself. Okay, so good bounce, coin. I would never trade this company, ever. Why are you trading this company? Tell me, do you understand this drop in sales? Because if you don't, you need to ask yourself, why are you investing in a company where we have a huge drop in sales and a huge increase in spending, in net income? It could have been something, but if you don't understand, if you cannot educate me, tell me, oh, Nick, you don't understand because but that's going to change. Then what are you doing? Why are you investing in coin? I wouldn't even touch it for any. There's so much I don't know about it. Like, if you want to win in trading, you need to eliminate the variables. With this one, it has all the variables of any regular company, plus some weird stuff going on. All the variables of the market and the Russian headlines and all of that. All the variables of Bitcoin and all of that. All the variables of Bitcoin banks and all of that. So any which way you slice it, you have too many variables. It's like, can you play golf? Can you get better at golf, or can you get better at like whatever, air hockey, where you have fewer variables to deal with? I know I cannot get excellent at golf, so I don't even try. If I wanted to pick a sport, I'd pick something that I know I can control my skills and a couple of variables. This one has 4 variables, 3 or 4 variables. So you say, oh, look how much money I made. Okay, so how much money did we make with BITO? I contend that it moves with BITO plus other things. So here, let's put BITO on top of it. Look at it. So if it moves like BITO, why wouldn't you just ditch it and trade BITO and avoid the headlines that come with Coinbase? Coinbase was investigated by the SEC or whatever. Okay, the SEC can't investigate BITO. Again, you can have headlines about BITO, but you have them anyway, and they will affect coin. And if you have coin headlines, they won't affect Bitcoin to a degree, the same degree. Anyway, I feel better trading an asset than a company that also moves with that asset price. Having said that, it's going into resistance and it has support. But it has had support for a long time and it hasn't held any of it. So I'm going to tell you, if it doesn't get out of 66.50, it's probably going to stay mired down here. And that's the best case scenario in that case, because maybe they finally put in a bottom in 23. So the opportunity is above 66.4 and into support. So if you think it's going to break out of here, I wouldn't do it at the door. I would do it on small dips. Or if you do it now, make sure to leave room for error and stop out if it doesn't work. Campbell Soup. The better the market does, the worse the stock does. I've said it before. In case you missed it, check it out. Check out the stock on a weekly basis. How can I make you see it? Okay, the market, the U.S. market topped here. That was the top of the U.S. market, and look at what the stock did. From the top of when the stock market fell for a year and a half, look at what Campbell Soup did. Now that the stock market is recovering, look at what Campbell Soup is doing. Now, if we are doing just technicals, this red W you see, target 1 is here. So this is a good starting point for Campbell Soup shares, or selling puts to own shares below. Actually, I'm going to add it to my watch list. I don't remember its options. I've never traded it through options. Rallies will be met with sellers at 50. Target 2 of this red W is down in the 36 area. So I'm going to say go long here and definitely go long here. This is T2. Okay, so T1, it already hit the area. It has support. I think you can nibble long. If I'm long, I don't bail on it at this level. But it is definitely delicate. The earnings report wasn't bad. It's just reaction. All right. So if you want to be long stocks, and this is a good value stock, and hedge against the market, so this may not follow the market lower if we correct. CRM is always a conundrum these days more than ever. Stuck sideways in a pretty big wide range. If it wasn't for that spike, this was like the Amazon spike. But Amazon lucked out, and Nvidia said, okay, we'll take you above that. What is it going to take CRM to break out of this versus lose this? So I feel like I may get an opportunity to get long CRM in the 200s. You do have resistance above. Hey, Luis, there's your IC. Iron Condor, 2 weeks ago, Luis came to me with an Iron Condor ID. I said, what do you think of this one? I said, you nailed the range. And just make sure you don't live through an earnings report. A lot of support into 200 or lower. I think I would want to know about it. And a lot of resistance above. This was a pretty good Iron Condor so far. Crowdstrike. We traded it well on the drop from the earnings. This was the drop from the earnings. I sold puts and I shared it, and within hours we had gotten 40% of the credit already played out. So I exited my puts. So last week I know I discussed it with a couple of people, and this was the original put spread, and somehow I ended up with a credit put spread here as well at 125. I don't remember doing it, I swear to you. So it's a viable trade. There are support here and support here, and this was a reaction to an excellent report. So this is just price action, I think. They broke out of here. The target of that, it should be higher than this area. So my theory is that they're just coming back to double tap the breakout zone and then recover and meander higher. So you could get long with shares or calls, but I would advise, I would think it would be a good idea to not go all in. So if you take a first batch, however you go long, shares, calls, sold put spreads, leave room to add a better position after a drop if it happens. Remember, sometimes the drops happen because of outside things. Like if we go on tomorrow and we have full-blown war in Russia, for example, that's a new thing that Wall Street has not dealt with. If you don't know what I'm talking about, don't get too freaked out about it. But that was the goings on from Friday to Saturday. I educated myself quickly on that. More on this topic in my prep video tonight or tomorrow morning before the open. I decided to maybe deliver the weekly game plan on Monday morning versus Sunday night. I think it's better. I'll test it out this week and see how the response is. Okay. I share it like always. All right, so hold or go to 144. What is this? Chevron. Oh, snap. Okay. So not my favorite cup of tea as far as companies, because I don't believe in the oil hype. I think oil is going much lower in spite of all the BS that they're slinging in our way. Let me show you the threat on the technical threat for Chevron. I've been spot on with these stock prices, and I said they are selling rallies. That's months ago. That's why we shorted it and we made money. And once they lost 168-ish, that became a roof. Then they did the same thing around 163. So now the question is this a solid floor? Because it's not, it's going to 139. Head and shoulders that will be way lower than 139, but let's just go with 139 first. If you don't hold last week's lows, you're going to slippity-doota, slippity-a, and the target is going to be at least. I'm being very generous with this target, by the way. I don't want to make it this fat, so not to scare people, but it's definitely a serious business risk. You have plenty of support. You have buyers here, and that would be a buying opportunity. You have buyers here too. Okay, so all this stuff has to, so basically, check it out. Just like you have buyers there, you have sellers here. But those sellers, I guess I can do it that way. First opportunity, these two things. You take this out, you avert disaster. You take this out, you're down to here. That's how I see it. Maybe even lower. Ooh, maybe this will cause it. The companies are great, and I would be looking for entry opportunities in shares, which is what I said in the pandemic. You should buy them with as much as you want. In the pandemic, they were no-brainers. All right, Caesars. Okay, so it had its party, and now it's back to real life. This whole zone is support, so pick your entry points accordingly. It might bounce here. It will face sellers here. What happens then? Did the curl back down and lose this and end up down here? So here is a good starting point. 42.5 is a better starting point. Resistance from 48 on up. Disney, I could go long against prior bounce, just like Bank of America. It has a proven bounce level. I could go long inside this rectangle and expect sellers to be up here into 90. So it's not going to be easy. I shared a sold 75 naked put, which I have, and I closed for partial gains. I shared a credit put spread also, which I said I would close it just in case. I don't know why. I just have a hunch that I don't want to be long Disney, although the stock chart says yes, you can be. Okay. They cannot stop being activists on the social scene. I think the only company that can get away with it is Nike. I don't know why all these other companies insist on doing it. I don't know if it's the love of the Nike shoes or Nike's tremendous marketing team. They can use social hot points as a marketing advantage for themselves. Everybody else that tries gets into hot water. So Disney is scratching on that wound again. So they vote with their feet. That's funny. So it is, from a technical perspective, a place to get long. The fundamentals of the company are not bad. So somebody that got long or somebody that's staying long, you're correct. This one, DigitalOcean, is it advertising sales? No. Cloud infrastructure. Okay. It has support scattered into 37, 36. 35 was the breakout. Let's call it 35 and a half. So the closer to 35, the better. I could sell puts to own shares if I believe in their P&L. And their P&L looks okay. A little bit more spending here. More technical. Let's see. Nope, that's not what I meant. I wanted fundamental. Statistics. 6 times sales, not too bad. Cash from, so they don't bleed cash. That's pretty good. Income statement, I don't really care as long as they're growing sales, and they are. All right, so I'm going to add that to the things I watch. I don't remember trading it for myself. Cybertron, hey Brad, Cybertron is trying to Nike customer vote with their feet. Nike customer just do it. All right, those are dad jokes, but they're funny. All right, so it's falling into support. If somebody wants to own shares from here, please leave room to add more later. I would rather do a synthetic long, which is selling a put, buying a call, or a call spread. Let me know if you need help with that. DocU, it is falling into support. I would take a long if I don't have one. If I do have a long, I wouldn't. If I'm long and I didn't stop out yet, going into this is not a reason to stop out. Now I would raise the alarm if they lose 47, 46.8 would bring down 42. Easy. Did I take a trade on this? Why does this sound support? I mean, did I discuss a trade on this one? Maybe. Rallies into 54, I think, will be met with sellers. You see that likely support comment here? It's no longer likely support, likely resistance, because it was support. You've heard the term. Prior support becomes forward resistance. Devon, everything I said about Chevron works here. Good company, falling into support, has upside potential towards 49. I think it would be met with sellers. You can go long and stop out if you're wrong. It has a little bit better support than Chevron. Chevron, they're already down here at the support. This one has a little buffer, so I would prefer this chart long to Chevron. Again, I'm not saying anything about earnings because that's up to you. Anything I say that goes into earnings has a coin flip aspect to it. Enphase, I went long. It worked, it didn't work, it worked, it didn't work. So I do have a long on it. Selling a put or a put spread for 7.7. Now I'm a little bit nervous because although the level is fine, 150, I don't like to take credit spreads into such a short period of time. So I have seller's remorse on that perspective. I'm a slow poke because I'm busy throughout the day. I don't want to babysit positions. If the market has a 3% hiccup, we will be in trouble with this one, and I would have to roll it. So it was a good entry into support like Chevron and Devon, but I have my eye on it. Okay, it makes me nervous. This one is kind of like Devon, but not as pretty a chart. Why? This should have been bulletproof. At least defend it one time. I expected a pop. They didn't do it. They just closed below it convincingly. So unless they go back up to 1255, I think they're going to just drift towards 1240, which is not a big deal, right? It's falling into support. So if I'm long the shares, I'm not exiting. If I'm looking to get long, I could nibble. I don't know much about it. Is it pays dividend? Yeah, almost 9. So I would rather get the dividend from BITO for now, or even, like I said, Verizon. It's less of a violent of a stock and better value. So just make sure you know what you're doing with the stock. So you say, oh, I'm getting 9%. Yeah, but you could also get 3% drop. I guess it's not bad. I mean, it's good support. This looks pretty solid support. I can't imagine the scenario that would cause it to lose that. But do some homework on the fundamentals. Make sure it's fine. Etsy, pretty disappointing where it closed on Friday, because this was a wild candle from the earnings reaction. Look at it. Spiked up to here, fell down to here, and now we're below it. I did discuss it in the live room, and these were two credit spreads that we discussed. 7.7 or 7.14. They do report earnings shortly, I think, thereafter. So make sure, you know, our Etsy trade worked. I wanted to sell naked puts in it, which would be fine. But the margin requirement for this stock is 5 times more, say, than Twilio, which is crazy because Twilio is a crazier stock. I don't know why they're charging so much for margin requirements. So maybe the market makers who are selling stuff see some trouble with it. I don't know. I think I would not want to be long through anything other than a sold put or put spread down here. Give it room to fall in case it does fall. The business is fine as far as I'm concerned, but there might be a headline looming. I don't know. FCX, not an obvious entry point. I think 37 would be better, and it could go down to 35. It does have support at 37, actually 37.50 through 37. But that red W has more downside. So if they don't take out 39.50, I think they're going to crawl back down and drift lower. Fubo, what? Same exact chart as this guy. So rallies will come in Fubo maybe towards 2, but I think it will curl back down and end up at 160. So I would sell rallies if I'm long. If I got long last week, I would sell rallies. Are you trading it? Because that looks like a junky stock to trade. I don't know what you're doing. Hopefully you know what you're doing. Yeah. GLD. So we nailed it. This red path you can hardly see. I'll make it more visible. Look how well it played out. And the bounce, look at where it went. I drew this before that candle. Actually, I think I drew this white thing when I drew this red thing. So the script is coming along just fine. I don't know if you see it. I see it. I see a drop. I see consolidation. I see them losing the consolidation neckline. And the target is somewhere around 174. Now, here's how I can say it to you. If it's not above 181 convincingly, it's probably going to drift lower towards that line down there. And it wouldn't be a disaster. It would just be a good entry point. Okay. Now, there should be a rally, and they got most of it here. The target of that rally off of the green, there's a tiny green M right here, is up here. So they need to be above 181, 182 quickly. Generac, I would not be long up here. This is a seasonal thing. If you live in an area where you lose, where weather causes you to lose power, you need a generator. I was in the market for a generator. I looked at them for like 10 minutes and decided that nope, they're not for me. I ended up with a Harbor Freight generator. 3,500 kilowatt peak, so 3,000 running time. They have nothing special that I saw. I looked at a couple of other brands that had other things that are special and they looked premium. I read all the reviews. So fundamentally, it's okay. Right now, you have a limit at 136 and a buyer at 116, 117. Ping pong between those two values. If you can take out 136, maybe you can get to 152. Beat this, you can get to here maybe. Otherwise, better entry down lower. Okay. I'm going to comment on Google because they're both the same. And I have my lines here. So I'm going to zoom in. So check this out. We drew a head and shoulders that came to fruition early and perfectly. That was my target. And then they were trying to recover the neckline. If they're above this purple bar, let me say it this way. If they're at 123.50, then they have the opportunity to snap out of this and follow Apple. Otherwise, they could bleed lower. So if Google does not convincingly get above 123.50, it's at risk of drifting lower towards 118. Target 1 was met. Target 2 still on track unless they go up to here. Okay? It's a good starting point to be long into that low from Thursday. 119, 118, 117, those are good spots. So I'll add an alert here. I'll add one down here too. Goldman Sachs, just like Bank of America, it's falling into support, except this looks ugly, so I don't want to touch that one. It could bounce hard to 330 or 332, but it's at risk of hitting 300 or 296. I feel like Bank of America is closer to a bottom than this one. So look at it. It looks like a head and shoulders in the making. So here's one scenario. They don't bounce here and they come down to the next level of support, or they bounce here and then they fail to defeat resistance, and then they do this, and that one will get you something like this. At risk of doing that. I'm going to make it a regular thin line because I don't have a lot of conviction. I can tell you where support and resistance are. Oh, look at that. What are all these lines? You do have support here. Okay, that's what we got. And then better support lower. I would be intrigued down here, below 292. I just don't know what they do. Like, they're a black cloud. If I'm investing in banks, I would invest in a bank that is not a black cloud. Black box, I should say. She Corp. I don't know what that is. All right, you have support. Looks like solid support, but you need to be above 28. You don't want to test losing this support. You'll end up in the low 20s where you have better support. 1 second. Whoa, Bradzinga, that's a, what is that, a Sting song? There's a little black cloud on my stock today. HTP, that's funny. I said what I said. It has support, it better hold. It has resistance, it better give it above it. It's not a bad start, but we'll stops. Hood. Okay, progress. Let's see what they do with 9.8 versus the support at 9. 9.8 versus 9. Let's see what they do. If you ever get above 10.2, you might get another $1. I'd get out of my shares. I got assigned 100 shares, and they're very, very red. I keep them because it's a mental reminder that everybody makes mistakes. Hubs. Vulnerable towards 495 again. It's not a touch for me up here. Unless they break out of 535, I bet you it gets down to 470 before 540. How about that? 470 before 540. That would be my guess. I would say gently. I was like, I don't know anything about the company. I would say vulnerable and vulnerable. Vulnerable. How about that? Not just so not anybody thinks it's a forecast. Better entry point. What is this purple thing? Whoa. Oh, I think I remember discussing this. I said I would sell a strangle on it. A very wide strangle or an iron condor. Intel, great recovery. Suddenly now everybody's talking about Intel again. Coming back into an area that has been in contention for a while. So struggle, breakout, can't hold it, coming back into it. I think it's going to be a struggle. I wouldn't short it. I would be a buy the dipper in that one. I think the fans of AMD and Nvidia can blow smoke up those two stocks so long before they figure out, they're not that great. So they're not as great as we think. That's why I shorted Nvidia successfully. I scalped, but I'm still bearish Nvidia with a lot of room to run. I didn't like short it right here. I can still make money even if it rallies a lot. Intel 3450, 35 is going to be a problem, and it could drop into the 30 or 29. It should be an opportunity. KMX, I would never trade that stock. It's in a breakout. What are you asking me? Permission to go long? Not for me. It looks like the 100 mark, 90 to 100, was a pretty important neckline that they lost, and going back into that neckline, not for me. Definitely not for me. Just be careful. It is not an easy starting point, at least by the dip. LAC, drum roll please. Something is about to happen. I don't know. 13 or 30. One of these two is coming. It's either 13 or 28. How about that? 14 or 28. I don't know which comes first. You can hit a drum roll on a weekly basis, so that'll be a long drum roll. The sellers are in charge for the last month. The buyers have support. So the mini battle is 19 and 22. 21 and a half. Let's zoom in. Okay, so 1980 versus 2140. See how we're narrowing it down? 2160. So I'm going to put a box around that and let that be your playground. You can get long in the bottom end of this box and get out up here, or get short up here with stops. You see what I mean? That's their playground. So it's not a bad long here with stops. All right, and that is a chart you guys don't know, because this is the segment breaker. So we're going to stop video 1 and start video 2.